What's up YouTube? Welcome back to another video. I know it has been a while, but I'm back with a second video on this channel, and we're going to be talking about my dividend income for November of 2023. The portfolio is currently sitting around $31,000, and we're going to be taking a look into which stocks paid me dividends this month. Jumping into the first company, we have Lowe's. They paid me a dividend on the 8th of November, amounting to $2.21. Nothing substantial. I own 2 shares of Lowe's last I checked. I reinvested it to get back 0.011 shares worth of Lowe's. I do have automatic reinvestment, so as you're going to see, everything's going to get reinvested back into its own shares. Also, if you're wondering what the Dividend Aristocrat logo is doing there next to the account, I did hide my account number just for my own personal privacy. And if we take a look over at some of our stats from Seeking Alpha, we can see that the current dividend yield on Lowe's is about 2.12% with an annual payout of $4.40. The current payout ratio is sitting at a pretty nice and low 32%. That means that there is some room for growth potentially for Lowe's to continue growing its dividend. The 5-year growth rate is excellent at almost 20%. However, it should be mentioned that the latest dividend hike was substantially lower than this. I think times are going to be a little bit tougher for Lowe's, Home Depot, those kinds of retailers because of the housing market. But they have an amazing track record of growing dividends for over 60 years. And moving right along into MasterCard, it paid me 1 day later on the 9th of November. This was a very measly 57-cent dividend amounting to 0.001 shares. I only own, unfortunately, 1 share of MasterCard. When I had first invested in it, my portfolio was a lot smaller, and so I didn't feel comfortable investing more than 1 share since it was a relatively expensive stock. Also, I guess I should mention I do buy shares 1 entire share at a time. I don't have the option through Vanguard to buy fractional shares unless I buy their own ETFs. So that's kind of what I'm stuck with right now. But I wish I owned more MasterCard, but I don't. So that's the kind of situation I'm in, but I do love holding it. And again, looking at Seeking Alpha here, we can see that MasterCard has a very low 0.56 dividend yield. A lot of this is actually not because that they're growing the dividend slow, but rather because of how fast the stock price is appreciating. The annual payout is $2.28 with a payout ratio of 19.44%. That's an extremely low payout ratio. MasterCard does have a lot of free cash flow. It is going to continue growing this dividend. Their 5-year growth rate is 17.92%. It has been slowing down in recent years, but if we look at the most recent dividend increase which just occurred, or I guess the announcement that had just occurred, I think that came in around 15.8% dividend increase, which is huge compared to most other companies. They have a good dividend track record of 12 years, and so we can expect them to keep growing these dividends. They also, I believe, announced an $11 billion stock repurchase program, or buyback program, I should say. So that's going to be very good for the free cash flow. It's going to be increasing that free cash flow per share and increasing your ownership in the company. Moving right along into another holding that I really like, General Dynamics. General Dynamics Corporation is part of the military industrial complex. One of the things they're most known for is the F-16, which I have pictured in the back here. They're the first to develop this fighter jet, which has been used everywhere basically. They're also in charge or responsible of supplying the Navy with submarines. So they have a pretty wide moat there when it comes to their investments and their product they put out. They did pay me a dividend of $2.66. I do own 2 shares of General Dynamics. I'm fine with that. I also own some Northrop Grumman Corporation, so together they make a small portion of my portfolio, but just enough to where I'm comfortable with it. I wouldn't mind owning a couple more shares of General Dynamics, but for now I'm going to be happy with that as it is. And moving right into Seeking Alpha, we can see here that they do have a 2.09% dividend yield. Pretty good, not too low, not too high. I'm pretty happy with that value. Would like it closer to 3%. But nothing wrong with that. The payout ratio is sitting at a comfortable 43%, which is definitely great. And the 5-year growth rate is sitting above what it takes to keep up with inflation at 7.54%. I'm pretty happy with that. What I would be concerned about is some of the dividend increases lately have been lower. For example, this year they did only raise their dividend by 4.8%. That's getting a little low for my liking, but we'll see where they go from here. Maybe they can, step it up in the next coming years. The dividend growth history is 29 years of consecutive dividend increases, which is amazing, making them a dividend aristocrat. And moving right into one of my newest holdings, we have Texas Instruments. I've been eyeing this company for a while and wanted to buy in. I was waiting for the price to drop down a little bit because the price was a little too high for my comfort levels. I think my average buy price now is around $153, so I'm happy with that. I invested a decent amount of my portfolio into Texas Instruments in the month of October, and that amounted actually to this entire dividend that you see here, $16.91. That's pretty substantial in my opinion. It amounted to 0.113 shares of Texas Instruments, so that was great at a price of $150. Really happy with this investment. I think they're going to have some rough times ahead of them, but if they drop significantly lower, I will be looking to add into them. I think they have a great business model and they're a pretty strong engineering company looking to grow. And then swinging over into Seeking Alpha, we can see once again our dividend yield is sitting at a 3.3% yield. That is awesome. That's right around where I want to be looking for. Around 2.5 to 3.5% yield, I think, is kind of like that golden zone. We have a pay ratio of 64%, so it's not too low, not too high. I wish it was a little bit lower, but I can definitely handle 64% payout ratio with Texas Instruments. The 5-year growth rate is sitting a nice 14%, but it should be noted that the recent growth has been substantially slower. The dividend growth history of 18 years is phenomenal. They're approaching aristocrat status, and we're looking forward to that on the Dividend Aristocrat channel. And last but certainly not least, we have Apple. I'm sure everybody's very familiar with this company. Doesn't really need any intros. It paid me a dividend on November 16th of $2.17, which I reinvested to get back 0.011 shares of Apple. I'm really happy with this investment so far. I was waiting a long time to buy into this, and I think I have an average buy price in the 130s. So I bought it, November of 2022, either that or December, when prices really dipped in there. I'm going to be looking to hold this company for a while. I'm pretty comfortable with this investment. Not sure I'm going to be adding anytime soon at these current prices. I think the company is going to keep doing well, but its margins are definitely dropping on some of its products. And looking over at Seeking Alpha, we can see that it has a very tiny dividend of 0.51%. I do believe that it's a little smaller even than what MasterCard has. Again, a lot of this comes from the price increases that have happened, or I guess the price appreciation that has happened for Apple. Aside from that, it does have a payout ratio of 15.36%. That is extremely low. It has a lot of room for growth there, in my opinion. But if we look at this 5-year growth rate, it is kind of low, 6.15%. Apple did give us a very measly dividend increase of about 4% this past year. So we'll see what happens there. I really hope they start putting more money into the dividend again. I know that they're reinvesting a lot back into doing share buybacks. They have a huge share buyback repurchase program that does help push up the free cash flow per share up significantly. But I would like to see some of that going back into the dividend. They were focusing on the dividend for a while, but it seems like they've eased off of that. And I think for their size of the company, focusing on dividend will be nice for the shareholders. And now quickly jumping into my portfolio dashboard, we can see that we have a portfolio value of about $31,000 with a total invested of $26,000. My realized gains are sitting right around $5,000 right now with a total return of almost 20%, which is amazing. A lot of this has come in the recent month. I have earned a total dividends of $614 with a yearly projected income of $623. So we'll be basically doubling that every year. My portfolio yield is sitting around 2% with a yield on cost of about 2.4%. My total holdings are now about 23 holdings. I do want to trim that down a little bit, but I feel pretty comfortable with my cash position of about $30,000. I think we can make some big moves this year. Looking over here, we can see the yearly amount invested that I've had every year and my dividends received. Start out $12.45. You can see how quickly it's increasing. Now we're sitting at already $343 received this year with a big sum probably coming in December. Also, my yearly dividend history chart shows the steep increase that we've had. This has not been so much of just the snowball effect, more so just me investing a lot more money into my portfolio. So that snowball effect will take longer to see. The monthly dividend history here, which we'll take a look at in a second on a different page as well, is pretty interesting to look at. And the annual dividend payout per stock helps show that my ETF VOO is actually my biggest holding and it does pay the most amount of dividends, but that's followed by SCHD, Altria Group, and Texas Instruments now. So I'm pretty happy with that. Looking over my total holdings, we can see my distribution here. My biggest position is VOO, followed by SCHD, but we have some positions kind of climbing up right now. Moving over to look at my pies, we can see that my total portfolio value now is sitting at $31,000, like I mentioned before, and my cash percentage is 3,346. I do like to divide my portfolio into 3 different sections. Key to success is, I guess, what I would label my ETFs. Divine dividends is just my dividend stocks, and speculatives, I think that's either doesn't have a dividend, the dividend isn't as straightforward, it might get canceled, might not, and or it's just a speculative play, value play, trying to make some more money. See over here the different distributions that I have. Texas Instrument is one of my newer holdings. Like I said, I invested $2,000 basically in the month of October alone, making up now 7.1% of my portfolio. So that was a pretty big month for me. Definitely a substantial amount invested. I do want to increase my speculative holding section. It's a little low right now. Like I said, they're kind of random. You have some stocks that are not so speculative, maybe in your opinion, but they're just not as safe like the ones I would label in the dividend section. And jumping into my monthly breakdown, we can see here how much in dividends I received each month of each year. So starting in 2020 is when I first started investing in this account. and you can see how much it's increased and how quickly it has increased. So the graph does a very good job displaying that. I only got quarterly dividends at first, so that was because I only owned VOO for a very long time. Then I started investing in another ETF, SCHD, and then starting in 2022, I actually started investing in individual stocks. I really like holding individual stocks now. I think it's a more interesting way to invest. I can better choose what kind of companies I want in my portfolio, and it gives me some opportunities for potentially more growth, but of course, that comes with more risk. December 2023 is probably going to be a really big month, pushing that trajectory right up. So please look out for that video. It's going to be a great one. And yeah, looking down here, we can see how much it's increased my dividends. Now I am getting paid dividends on each month of the year, which is the first year that's happening for me. As you can see, I invested $2,642 in October, which is a huge amount for me. Not so much in November at all. And for December, we'll see if I'll end up investing anything. Hopping into my future outlook simulator, you can see here my starting principal, my expected annual contributions. I'm hoping for about $1,000 per year. My current dividend yield is sitting at 2.1%, and we can play around with these numbers if we want to change them. Let's look at an example right here: 6% dividend increase, 8% appreciation. My expected value at 30 years is going to be $2 million with a dividend income of $18,000 per year. So we can also take a look at some other numbers if you guys want to see that. A higher dividend increase, which is not that practical, I should mention. 10% is pretty extreme. With a lower expected price appreciation of 4%, doesn't really add up. But in this hypothetical situation, my value of the portfolio will be lower. My dividend income will be substantially higher because you'd be able to purchase a lot more shares with dividend reinvested than you would have been able to otherwise. Looking at the 40-year mark, of course, 10 more years is going to make a big difference. The portfolio is going to increase substantially. So even if we lower the dividend increase and increase the price appreciation, you could be looking at a $4 million portfolio. Of course, it's not completely realistic, but just a fun way to look at it. And then here's my order history. It's how I keep track of all my dividends. So as you can see here, this is my lowest payment. The reason I'm showing this is because when you purchase such a small amount of shares, sometimes you don't actually get the price of the shares that the company is trading for at the time. So even though my total order was $2.21 and I bought 0.011 shares, it actually ended up being $200.91. So I calculate that myself. For MasterCard, you can see a better example. With the 57 cents reinvested to buy 0.001 shares, I was actually buying MasterCard at $570 when I reinvested, technically speaking, even though I was supposed to be buying it at, 400 and change, whatever it was at the time. And then moving over to my order history, I just wanted to show this off so you could see how much I spent in the month of October. Like I said, it was a big month for me. I was basically buying Texas Instrument every other day. I was also buying some S&P Global, which I really like that company a lot. But going into November, I'm not expecting. I actually didn't buy almost any shares at all. I think I spent $200. There we go, on Target in the month of November, and we'll see if I'll be buying anything in the month of December. I hope you guys really enjoyed that video. It was very fun making it. I'm gonna try to keep track of my portfolio a little better. Gonna try to put some more frequent videos on there. If you guys do have any recommendations for this channel or anything you want to see me make a video of, make sure to mention in the comments down below. Also, let me know what your highest dividend payment was for the month of November, and if you're looking forward to any dividend increases or dividend payments in the month of December. Thanks again for watching. I'd appreciate if you guys would subscribe to the channel. It would mean a lot, and I'll see you in the next one.